recorded. Right, fantastic. Ladies and gentlemen, welcome to our London live trading session. Today it is the 2nd of April, 2025. I'm Max Capital, a founder, risk manager, and performance coach here at Wall Street Institute and Company. And we are, as always, we are excited to have you on our sessions. So yeah, as you can see, today we're going to talk about integrity. I'm raising this because I haven't been able to be consistent with you guys in the past 2 weeks um, because I'm trying to set up something business-wise, and this will benefit you. Most of my businesses are in the financial markets, funny enough. This will benefit you as well in a really, really great way. I'm yet to announce it. I'm not the type of person that announces things before they are completely done, so to speak. So yeah, we do not rise to the standards we have when others are watching. We fall to the standards we have when no one is watching. How have you been performing these past 2 weeks when there were no daily live trading sessions? Were you still following the right methodology? Because we can fake it all we want when people are watching. I'm someone who works out, and I stopped going to the gym, I think, what was the year? 2018. Because there was always this competition, silly competition in the gym, who can lift the most weight, who can do the most amount of reps. And I couldn't do those things when I was alone. It's always good to have your brothers, your sisters around you, family, encouraging you. But truth be told, that's not who you are. The real you shows up when no one is watching, right? So this is integrity. I live by this code. I think it's one of the reasons I'm where I am today, life-wise. All praises to the Most High God, but I put in effort when no one is watching. And I'm just hoping and praying that you guys do the same for yourselves. And on that note, no one is coming to save you. Not your spouse, not your partner, not your father, not your mother, but they can only do so much, right? Most of these things have to come from you, right? So we're gonna have probably a 15 minutes Q&A session after this. I have to update my uh, TradingView Premium. So yeah, I hope this makes sense to you guys. We do not rise to the standards we have when others are watching. We fall to the standards we have when no one is watching. Very, very important. Let's jump onto the charts, ladies and gentlemen. I know you have your own requests as far as markets that we can analyze are concerned, but just allow me a little while to go through your dollar index and the like. Why? Because most economies are pegged on the US dollar, so it's very important that we understand potential direction of the market. So this is analysis from last week. We still have that fair value. Remember that fair value we were talking about? Excuse me, sorry about that. But as far as supply and demand, is concerned, we have a very nice supply and demand here at 107. And the reason I'm drawing this is to make you understand the power, why this level is powerful, because we're coming off this one. So sometimes my mentor, to avoid missing out on a trade, I'm not supposed to tell you what my mentor was telling me. I paid for it. Kidding. Yes, I paid for it, but I'm always going to share. So he would combine two levels that are close to each other like this. So 108, let's get to 107, 107, 500 or 108 on the dollar index. Then we're going to look for selling opportunities, ladies and gentlemen. However, with our normal way of analyzing the market, as you can see, this doji candlestick, which is the current month, that would mean we're bullish. But I'm using the previous month's direction since we're just 2 days into the new month, right? We're just 2 days into the new month, so we do not have enough trading data to gauge the direction of the institutions, right? Then in terms of the demand, because you must know the opposite end, right? You must know when you should now start thinking about stopping to sell the dollar once we get to around 102 or 101. I hope that makes sense, ladies and gentlemen. So, yeah, let's move on to other pairs. Probably USD right? I think we're still expecting something, as you can see, almost similar to that one. However, the areas that I've chosen, right? So, you won't always be right, okay? That's one thing about me. I don't care about being right. I know what I'm playing here is a game of probabilities and risk reward, right? So we have fair value there. Remember what is fair value? This is an area that the market traded at for a very long time. So here's where we become different at Wall Street Institute and Company. You know, a lot of people trade this because they will tell you that there's resistance there and there's support over here. So this is the range that we're talking about, right? Or you can say fair value is ranges. We tend to avoid these areas because what we trade, remember, we trade market discrepancies. So this is a good market. When people are talking about a good market, they're talking about this, a ranging market. But when a trader is talking about a good market, this is what they're talking about because we make money when price made clear displacements. Give me a thumbs up in the comment section if you understand this. And if you don't, let me know, right? So we do not trade this at Wall Street Institute and Company because we understand the relationship between supply and demand, and how we approach the market is from the simple perspective of buyers and sellers, right? Let me remove everything so that we follow our normal approach of doing analysis. Right. So our strategy, if I would put it like that, is based. Our strategy is based on understanding the relationship between buyers and sellers and a product, which determines price. Why do we do that? Because the one thing that the banker, the hedge fund manager, Donald Trump, Paul Tudor Jones, um, Vanguard, BlackRock, all these big companies have in common with you, it is the price, right? So don't go to an area where you have a disadvantage. Don't go to trade news because these guys have low latency news. I mean, they receive news in a second through their Bloomberg terminals and stuff like this, right? So these guys will receive news that quick from their Bloomberg terminal. So we do not go to an area where we have a disadvantage. We go to an area where we have an equal playing field. And what is that? It is through price action. So the banker, the investment manager, like I said, Paul Tudor Jones, Vanguard, Apple, Nvidia, you name all these companies, what they all have in common is price. So what you have to be looking at is price. Remember, we study the relationship between supply and demand. Let me just do this for a moment. Let's see. Let's go to 1 hour to make this make sense for you, right? So what do I mean? The relationship between supply and demand, right? Yep. Whenever the market or whenever the supply is out of balance, supply and demand is out of balance. That's what we trade. Okay. We trade when supply and demand is out of balance. Well, just give me a second. Right. There we go. I think we're going to have a very good example here. So we do not trade this because this is a good market. This is what markets were meant for. Yeah. I really hope this makes sense. Give me a thumbs up if this makes sense. So the reason I'm starting here is because none of the other things that I'll go through will make sense if you do not get this, right? The relationship between supply and demand. Yeah. So this is a good market. We do not trade that. Whenever you hear people say this is the market is good these days, this is because every buyer can find a seller. That's not what we trade. We trade market discrepancies. We want to see an imbalance, a clear imbalance. So would look at this supply level, would also look at this supply level, which worked, right? So the idea of market discrepancies is that when the market leaves an imbalance like this, or go aggressively to the downside or to the upside, what happens is the market has to come back and close that because the market and nature itself doesn't allow a vacuum. The markets and nature itself doesn't allow a vacuum. So the market always has to come back and mitigate that so that the market is good or is balanced. So any market in the world was meant for one thing, so that every buyer can meet a seller, and that is what regulates price. Don't let anyone tell you any different, ladies and gentlemen, right? So we also have fair value here. So we're not trading here. We're not trading here. But the funny thing is that traditional let me say content on trading would say we have resistance here, we have support here, so we have to buy low, sell high, right? This is only good for restaurant owners because that way they can keep their price of milk at the same level. My woman is a baker, so she worries about this. When prices go up, she freaks out because now she has to raise prices of her product, and then that's gonna be an issue with the clients because people don't want to buy at a higher price. So should you. You shouldn't want to buy at a higher price. So that's what we do. Okay. Back to my way of analyzing this market. Yeah. Okay. So we start on a monthly time frame. What are we looking for on a monthly time frame? We're trying to establish direction. And why is that important? We want to be on the right side of the market or follow the institutions. And you can't trade like them. I hear this a lot. I hear people saying I trade like the banks and then all of that. I don't. I don't have the resources. I was trained by some of these guys who have all the resources you can think of, the best psychologists, performance coaches, risk managers on their desk, right? So you've got all these resources supporting you to be profitable in the market. Yeah. So there's no way you can trade like them. So monthly time frame, we're bearish. So how do we determine that? We look at the current candlestick. Yeah. Bearish candle. And then let's go into a weekly time frame. The weekly is bearish as well. Fantastic. And remember, what are we looking for when we're going through these higher time frames, which is daily, monthly, and weekly? We are looking for the market to be in agreement. What do we mean by that? The daily, weekly, and monthly time frame must all daily, weekly, and monthly time frame must all give us the same direction. In this case, that's what we found, right? So we are bearish on the US dollar, Japanese yen, because daily, weekly, and monthly time frame are bearish. But what happens when we have a scenario where one of these time frames is the opposite of the others, or two? We follow the direction of the high time frame, which is the monthly. Yep. There we go. We just established direction. We're bearish, but this means we need to be looking for selling opportunities only. Okay. Where are we going to be looking for those selling opportunities? So this is something I devised myself over the past 12 years. You get to refine your strategy and learn a couple of things. Yeah. So this is what I do on a daily. After establishing direction, I then count from the current market price 5 candles back. 1, 2, 3, 4, 5. Right. And I look for a candle that has a very big body, which indicates that there were more sellers there and it's in agreement with the higher time frame. And this is the case, ladies and gentlemen. I'm just gonna mark it like this, right? And then step down to lower time frames. Why are we going to lower time frames? Everything happens for a reason, ladies and gentlemen. Why are we going to a lower time frame, like 4 hour? And here we have a clear supply. Why do we do that? We go to a lower time frame so that we can see these things clearly. One of the members here, Skutala, she's into medicine. She understands radiography, right? Whenever there's an athlete, I'm gonna make an example with an athlete because that's what I am. When an athlete tears a tendon, and the worst of them, the Achilles muscle, that's the worst injury for an athlete. So first things first, they'd have to go into a scan, and they wouldn't take just one picture. They would take pictures from different angles. What the doctor wants to understand, or the surgeon, what they want to understand is to see clear where the tear was, and to see where or how to approach fixing this issue in surgery, right? You might find that the front picture doesn't show you the right thing, but the left-hand side shows you the right thing, and the right-hand side doesn't show you the right picture, right? And then now you have an idea how to approach this. Same thing with the markets. When we go down the time frames, it doesn't mean that there's a time frame that's superior than the other. It means we're just going down to find clear entries and exits. I hope you understand this, ladies and gentlemen. So here's me going down the time frames, trying to refine my entry, right? Let me see, 30 minutes. It's probably the last time frame I'll go to now. Don't use this one anymore, but I think we're stuck with the 4 hour. So that is where our demand, supply was clear, right? And based on what I just spoke about, the relationship between supply and demand, you can clearly see, yep, you can clearly see that there's a displacement here, and then markets started ranging here. So this is fair value, and this is where our area is. So just to give you a tip, if you want to sell, find fair value below the area of supply. If you want to buy, find fair value above the area of demand. Yep. I hope this makes sense, ladies and gentlemen. So this is how this trade would be taken. Entries here around 150, 500. Stop losses around 159.50. And that is about 40 pips risk. And normally, if you get something like this, just aim at the bottom of this. You can get a very nice 1:4. But you know me, I don't take anything less than 1:5, and I don't force it. Yeah. The market has to show that that particular thing is available. So I can even push this to down here, but let's just stick to 1:5. I think that's okay. Hope that makes sense, ladies and gentlemen. Right now, I'll go to let me see, GBP USD. I have a trade on GBP USD. Hopefully it appears here. I went long on GBP USD yesterday, even though this looks like very thick area of value. But with experience, I had to find the area. See what I'm talking about? Market came down, we have fair value, and then turned up. When it turned up, we had a very big imbalance here. For those that trade SMC, for me, not to brag, but SMC is part of my basic course. The more advanced is understanding supply and demand. So let's see how I made an entry here. So this was my demand, right? And this was fair value up here. So right, remember what I said: fair value above the area of demand, and fair value below the area of supply. Sorry, I'm just trying to change this to the right template. So yeah, there we go. Fair value price, and then we have demand here. And you see, if you're gonna buy GBP USD, you're more likely having to sell USD JPY, as we've seen. So yeah, how am I going about this? The planning of this trade. I haven't moved stop losses yet. So there is my target profit over here, 1:5. So I'm targeting this high. There we go. 1:5, I'm good. And remember, the reason we do a 1:5 is so that it protects us on the day that we are not doing well in the markets. Let me quickly rush to the requested trades. So first things first, we have Euro AUD from Lebohang Lesejo. Pleasure to have you guys on these sessions, man. And I've been receiving some very good very good reviews, even though I was away, which is a very interesting part. So this is the trade that I was in last week on Euro AUD. So I think probably what my brother wants to know about this is to continue holding or even getting on a new trade, right? So I'm gonna remove this risk reward ratio tool. And come here. Let's go 4 hours. I think we're gonna see this clear. I'll tell you something about this level. I think this level is still valid. Who can tell me why? The market can still come back here and push higher. Who can tell me why this level is still valid? Guys, you've been showing up to these sessions. You should know this. I've uploaded tons of videos on this. Oh, just good news, ladies and gentlemen. I have been recognized by a US regulated tech company by the name of Ninja Trader. I'll be interacting with 1.9 million users of that very soon. And thanks to you guys. I know there's not much that you think you contributed, but you showing up, that kept me accountable. And what you guys don't know, the more I tell you these things, the more I master it, or the more it stays with me in my head. So why do I think this level is still valid? Can someone give me an answer real quick? Absolutely offensive. So the market needs to go at least 50% into the demand level. So this is the demand zone, right? This is the range of the demand zone. So it needs to go at least 50%. What we see here, the market only went to 10%, right? Thank you so much, Lebohang. So that means very soon we're gonna be in the same group with South African, Ghanaian, Swedish clients, and Swedish, Australian, and US clients. I'm still trying to get some people from South America, but it will happen. It will happen very soon. I'm gonna leave that to God. So yeah, so we need to go back 50% here. So if you're still holding, I am out of this trade, ladies and gentlemen. I collected a very nice 1:5 at this point here, and my entry. Oh, let me. Yes, there we go. I collected a nice 1:5, but there's a chance that we can beat this high. I hope this makes sense, ladies and gentlemen. Let me quickly move on to the next one. Someone says, but are you aware that the trade is at a demand zone? Um, let me do this. Probably for our demand zone. So this, I wouldn't consider it a demand zone, but I would consider this as another demand zone. But since the market didn't go deep here, I wouldn't take it. Let me give you another reason. Let's go down time frame. I hope you will get this clearer. Okay. One of the reasons I don't trust these levels. Can someone tell me why? The reason I don't trust this demand level, there are demands here, demand levels here. Why I don't trust them? Can someone tell me real quick before I move on to what's this pet? CHF JPY, which was requested by Offense. Lungisa says liquidity, you're right. Offense says fair value. Absolutely. This looks like fair value. So we need to go deep within this region. And with that said, I could be wrong and you could be right. Personally, I care less if I'm wrong or right, as long as I put in time in terms of making sure that I make the proper analysis and I manage my risk based on my trading plan. I stick to the plan. I stick to the plan. So let's look at CHF JPY real quick. It's amazing the things that will happen, ladies and gentlemen, if you keep being consistent. Earlier on, we started with a quote that said, we do not rise to the standards we have when others are watching, but we fall to the standards we have when no one else is watching. So the reason I'm now going to be working with 1.9 million users of a platform, it is because I have been consistent even when there was one person on this chat or on these live sessions. I hope this means something to you or helps you in some way, right? So 2 days into the month, we are looking bearish on CHF-JPY, obviously bearish on a weekly, obviously bearish on a daily. Normally, I don't trade the first week, but let's see what we have here, right? So from the daily time frame, okay, we've established direction. The time frames are in agreement. So the next thing that we need to look for is probably where can we find the supply that we can sell from. So what I normally do as usual is count 5 candles back. 1, 2, 3, 4, 5. And I look for a big candlestick that represents sellers. To me, ladies and gentlemen, it is this candlestick right here. Okay. So then I then go to a lower time frame. Lower time frame, I'm trying to see clearly where the supply or demand level is. We're going to have a mini lesson just now, ladies and gentlemen. There we go. Right. We have 2 areas of supply. Which one would you choose? So we've got, tell me which one would you choose and why. So we've got A over there. And B. Sorry, not G, B. Right. So we've got A and B, 2 areas of supply. Tell me which one you would sell from and why before I give you another recommendation should you encounter this. And look at this fair value. Ladies and gentlemen, this is not complicated. You know what's complicated? It is making peace with trading could be this easy. That was the hard part for me because I had learned, I don't know how many strategies, but in total, I had paid around 3,800 US dollars for different courses. So when my mentor taught me this, I just couldn't fathom the idea that trading could be this simple. It could be exactly how I live my daily life. Right. So A and B, which one would you choose and why? Lebohang says B because there's an expansion and fair value. Okay. Offense says A because it's premium, right? So both of you are right, but the most answer I would go with is A. Why? Because that is the most expensive price you can sell from, right? So let's imagine you bought a car at this level. You bought a car at 168,000 rands. Okay. You bought this car with the intention to sell it. And then 2 people make offers. One offers 170 and the other one offers you 171.5. Which buyer would you take? Or who would you sell the car to? Right? So you bought it at 168 and you get 2 offers. One says, I can buy it at 170. And the other one says, I can buy it at 171.5. So who would you sell it to? Real quick, ladies and gentlemen. Our time is running out. How you buy and sell anything in life is how you do it in trading as well. We do not complicate things. Ever since I've traded this, I've been having peaceful sleep. You know, I'm not even worried about what Donald Trump is going to say because everything is going to play out in the price action. Lebohang says 171. Absolutely, that's what you need to do. But should you worry of missing the trade should the market just turn at B? Because that is possible as well. So here's what we normally do. If you normally risk 1%, per trade, yeah. So this means now you have to split your risk into halves. So you have to put in here 5.5%, right? 0.5% risk and 0.5% risk here as well.